Now, what is this? The Economic Collapse blog. It's been a while. This is, I believe, Michael Snyder's site. Somebody pressed the panic button on Wall Street. Bank stocks and tech stocks crash as the yield curve inverts. Now, before I get started, I just want to remind you, Lindsey Williams. I think it was the very last video I did a little summary like I always do for you guys. And I told you, I'll say it again. I left kind of confused. Because on one hand, he was saying, you know, they know Trump's going to get 2 terms. He's going to be in there for 8 years. But after that, they're making plans to take back over the New World Order. They'll come in and do it. They'll let everything crash. But then in the next breath, or kind of towards the end of the video, I should say, he says, don't be surprised if you see many of the things I talked about tonight in the next few months. You look back and say, oh, yeah, Lindsey was saying that. I thought, well, why would he say that if we've got years to prepare? Yet, also in the same video, he was telling us kind of urgently, you need to start preparing for this. Like, you need to prepare now for this. Oh, Lindsey, we got 8 years, man. We got time. It's all good. Very odd, wasn't it? How he kind of slipped that in, almost like, guys, it's coming way sooner than you think. They're going to prick the bubbles even sooner. If you look around, it does. I don't know about you, but from over here, it looks like some bubbles getting pricked. Stocks aren't supposed to crash in December. Most of the time, we see a nice Santa Claus rally to close out the year. And by the way, we still might, you know, it's early December. To close the year out. And so what happened on Tuesday is definitely extremely unusual. The Dow Jones Industrial Average fell 799 points, which was the 4th largest single-day point decline in stock market history. In fact, there was not a single day during the entire financial crisis of 2008 when the Dow dropped as many points as it did on Tuesday. Think about that. Many believe that this stock market correction would be limited to October. You might as well add the crypto market in there with it. But then it stretched into November, like the crypto market, and now is extending into the safe month, so to speak, of December. Same with the cryptos. What in the world is going on out there? It would be difficult to overstate the carnage that we just witnessed. The Russell 2000 had its worst day in 7 years. Financial stocks plunged 4.4%. And as you will see below, the FANG, Facebook, Apple, Google, Netflix, lost enough money to literally buy McDonald's. There are many factors that are influencing the markets right now, but the biggest thing that spooked investors on Tuesday was an inversion of the yield curve. Just when it looked like the battered bull was healing, the Dow Jones Industrial Average suffered a drop of nearly 800 points Tuesday when the bond market set an ominous signal. The yield on the 2-year Treasury, U.S. Treasury bond, rose above the interest rate paid out by 5-year notes. Why the pessimism over that obscure-sounding shift? Well, historically, when short-term rates rise above longer rates, which is dubbed an inversion of the yield curve, it signals an economic slowdown is coming. However, it should be noted that the yield on 2-year bonds has not yet risen above the yield on 10-year bonds. And until that happens, many investors will still not consider the yield curve to have officially inverted yet. But any way that you want to look at it, what has been happening in the bond market is really bad news for the big banks because it's going to eat into their profits. In an article posted on Tuesday, let me try to say this in a straight face. CNN explained how this works. The flattening yield curve also affects the income banks collect from lending, since banks pay interest on short-term rates and lend on long-term rates. They make money off the difference. Once the yield on 2-year bonds fell below the yield on 5-year bonds, investors took that as a sign of big trouble for the financial sector, and they started dumping bank stocks like crazy, it said. The flattening yield curve caused investors to bail on bank stocks on concern the phenomenon may hurt their lending margins. The SPDR and S&P Bank ETF KBE dropped 5.3%. Shares of JP Morgan Chase, Citigroup, and Bank of America all declined more than 4%. Citigroup and Morgan Stanley both reached 52-week lows, along with Regional Financial, Citizens Financial, and Capital One. What's in your wallet? What's in your stock broker account, Capital One? Of course, this is just a continuation of a trend that has been building for quite some time. And at this point, the damage that has been done is immense. Following numbers come from Zero Hedge. Global systematically important banks are down 30% from 52-week highs. U.S. financials down nearly 15% from 52-week highs. Goldman Sachs alone is down 33% from 52-week highs. We haven't seen anything like this since 2008, and we will want to watch the too-big-to-fail banks very carefully during the weeks ahead. Meanwhile, the FANG stocks have been getting monkey-hammered as well. By the end of the day on Tuesday, those stocks had combined to lose more than $140 billion in market value. That right now at today's levels would wipe out the entire cryptocurrency market. $140 billion today. That's what those entities have lost. That would wipe out the entire crypto market. Just for a little comparison. Facebook fell 2.2%, losing $7.6 billion. Amazon 5.9%, losing $50.8 billion. Apple 4.4%, losing $38.5 billion. Netflix 5.2%, losing $6.5 billion. Alphabet, which is the parent company of Google, losing 4.8%, losing $37.5 billion. Again, Google, YouTube. Stop effing with your creators' advertising revenue. Since we split it and all, wouldn't it be wise to bump those? I mean, those numbers aren't looking real good. $37.5 billion. You know, we might be able to bump that up a little bit over here, us YouTubers, but I don't know about that much. That would be enough money, they say, to buy McDonald's, the whole thing. Yes, I'm talking about the entire company. Yesterday, I talked about the psychological shift that we have been witnessing. Instead of endlessly promoting the idea that the U.S. economy is booming, the mainstream media is now using phrases such as economic slowdown and the next recession and market crash. Here are just a few examples. Dow plunges nearly 800 points on rising fears of an economic slowdown. Worry less about inflation and more about recession. And the years of easy money in the stock market are coming to an end. Normally, the markets get very sleepy during the time period between Thanksgiving and Christmas, but that has not happened this year. The markets will be closed on Wednesday due to the passing of former President George H.W. Bush, which, again, that's today I'm doing this video. And perhaps this timeout will have soothed a lot of nerves by the market by the time the markets reopen on Thursday. But as I have warned before, the crisis is not even close to being over. In fact, it's only just beginning. We have been waiting for a long time for the largest financial bubble in American history to burst, and now it is starting to happen. It is being called the everything bubble. And as it implodes, we are going to see things happen that we have never seen before. When historians look back on this time of history someday, the crisis of 2008 will be just a footnote compared to what is coming. It has taken decades of very foolish decisions to get us to this point, and the consequences for our unwise choices are going to be far more painful than most people would dare to imagine. Again, it's not the first time we've heard a little doom and gloom from markets. And then they just, a little wipeout happens, they tick back up. Oh, it's fine. But again, I'm just thinking of Lindsey Williams. And how, kind of in the same breath, oh yeah, Trump will get 2 terms. They're not going to pop they don't play. They could pop up right now. Every bubble, housing, lending, student loans, credit card. He said all the bubbles. One pinprick, boop, they're done. They're all inflated massively. These debt bubbles, they're ready to prick them. But Trump's in there. And they can't have Trump in the house, the White House, that is, when they want to do it, is what he said. But then he said, don't be surprised if some of the things I've talked to you about several months from now, you start to see some of this. Why would you say there's 8 years, but then in a few months you'll start to see? Because if we're just seeing a little piece of it, there ain't no way in 8 years or 6 years from now, it'll get to that point. Like no. You start to see the signs now, that usually means something. Like, it's a fine, wait for 6 years, it's going to happen. No. And here's the other side. The deep state is in panic mode. They are now realizing, I'm sure of it. They know, oh my God, we're in trouble. We are in big trouble. Plan A failed, Plan B failed, Plan C is currently failing, it's over. Oh my God, we don't even have a Plan D. Maybe a false flag of some sort, but that's about it. And even that's not going to do anything to stop it. they may realize, remember what Donald Trump did? We will seize the financial assets of any people convicted of trafficking and all that stuff. Remember that? He has a little executive order. Remember that? So if these people who have their rigged markets, all their money in there, let's just say right now in the last month or so, have been pulling out of all their investments because they know we're in big trouble, and they may want to put that money into, offshore accounts. Maybe they want to buy some precious metals. They want to stash it so that way if the Uncle Sam comes down and goes after my known about bank account, I got my unknown bank accounts and gold and some other assets that they don't know about. But I got to get cash on my hands, in my hands first before I can get those other assets. I got to get out of the stock market. Because again, if your assets are seized and you got shares in companies, millions and millions of dollars, these elite, and I mean the smaller ones, not the big elite. You can get that. That'll be seized too. Oh, you have shares of company? You have stocks? Oh yeah, we're going to seize that too. Trafficking and this and that. We got homegrown terrorists. Yep, charged. So they got to pull up. So maybe this whole market thing is them pulling out right now. Maybe for cryptos too. I don't know, because cryptos did make a great tool for them to exchange money, the black market, and laundering money, the deep state. It'd be another tool for them to use. So the stock market's going to get crapped on. The crypto market's getting crapped on because everyone is fleeing for the exits to cash out, to then go put it into some kind of asset that if they get other assets stolen when they get out of jail, in their mind, or my family at least, will have these things and they'll know how to get to them. It's a theory. I'm not going to say that I know that this is happening for sure, but I do believe the deep state knows their days are numbered. They are in deep trouble. And if that were you, wouldn't you be pulling, okay, I saw the executive order he did. Let me go ahead and get my money out of there. Oh, I saw that. Oh, trafficking can do what? Oh, yeah. They pull my asset out of there and set it over here. I mean, not that I'm a bad guy, but if I were, I would be paying attention. Yeah, I saw the executive order. I know who he's targeting. He's targeting me and my buddies. We got to get out, guys. Time to pull out. So just a thought. Anyways, take care.